Hello, welcome to the European Open briefing for Friday, July the 28th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So we had some positive data out of the US yesterday. We saw the dollar rebound a little bit from its 13-month lows. It has given up some of those gains so far today. We do have the very important data coming up in the US session later in the day. It's going to be we're going to have the preliminary estimates of second quarter GDP growth for the US. We already had a flurry of data out of Japan earlier today, which were all very strong. We also had the Bank of Japan's summary of opinions of the July monetary policy meeting. That was also surprisingly positive for the yen, so we are seeing a broadly firmer yen this morning. The pound did come under pressure yesterday following the latest appointment bank by the UK Finance Ministry appointed new MPC member for the Bank of England, which the markets interpreted that as the new member is being dovish. We have a Bank of England meeting coming up next week, so sterling will be in focus in the coming week. But more interesting, in one of the more interesting moves we've seen this week is the Swiss franc. It has fallen to a 30-month low against the euro. This is mainly due to the diverging monetary policies between the eurozone and Switzerland. But let's start now with the dollar. We can see the dollar index yesterday, rather on Wednesday, it had fallen to a fresh 13-month low. It did rebound yesterday to back above the 94 level before slipping back again. We had very good durable goods orders data. They were up 6.5% month on month in June versus expectations of 3% increase. Core capital goods weren't as good. They actually dropped by 0.1%, although we did see a sharp upward revision in the prior months. We also had the advanced trade deficit data, which we saw a small drop in the trade deficit in June. So all of this was positive in terms of what we might see later today in the GDP estimates for the second quarter. It's expected to come in at an annualized rate of 2.6%. That's a big improvement on the 1.4% we saw in the first quarter. And also worth mentioning that Donald Trump suffered another defeat in the Senate. The Senate yesterday voted for repealing some parts of Obamacare. This, however, failed once again. So it just once again shows what a long journey it's going to be until they get through the healthcare reforms, and then after that. That's when they're probably going to get to the tax reforms. Looking at dollar yen, we can see that dollar yen didn't actually rebound as strongly as the dollar index, although it was still up a notable notably from the post-FOMC lows. It did rebound to 111.70 yesterday. It has now fallen to the 111.15 region. We had very good data out of Japan, but more interesting was the Bank of Japan's summary of opinions. There was quite a bit of surprise because the opinion summaries, they did show that some members discussed reducing the Bank of Japan's asset purchase target from 80 trillion to 45 trillion yen annually, and also there was discussion that the yield curve target shouldn't be applied too strictly, so it should be a loose target rather than a strict target, and also there was discussion that some members wanted a reversal of the Bank of Japan's negative rate. So all of this did come as a bit of a surprise because, of course, the Bank of Japan has so far maintained that it is in no hurry to tighten monetary policy given inflation is so far off target. And we can see that the latest inflation numbers, core inflation, which is what the Bank of Japan targets, came in as expected at 0.4% in June. Although we are seeing an uptrend in inflation, it's still it is a very small progress towards reaching 2%. But in a more positive note, we had household spending coming in at the strongest in 2 years. It was up 2.3% in June year-on-year, and there was a jump of 1.5% over the months. Unemployment also unexpectedly dropped more than expected to 2.8% from 3.1% the prior months, and retail sales were also solid at 2.1% year-on-year. So all of this bodes well for second quarter growth in Japan. Moving on to European currencies, so starting with the Swiss franc, because we can see here the euro has pretty much been surging against the Swiss franc over the past week. It hit a 30-month high, 1.1362 earlier today. This is the strongest level since January 2015. That's when the Swiss National Bank, in a shock move, removed its cap for the franc. And the reason why we're seeing this big gains for the euro is because, first of all, we already had the receding of political uncertainty in the Eurozone after the French elections and the Dutch elections as well. And also, given that the next move for the ECB will be to tighten policy, and that will probably come as early as January 2018, while the SNB has so far hasn't signaled that it is ready to tighten policy and would likely stay on hold for some time. So the euro and Swiss franc pair has come in focus more recently. That's why we're seeing these big moves in favor of the euro against the franc. In contrast, we can see the dollar hasn't been doing so well, although it has posted gains in the past few days. It is actually still down in the year to date, and it's currently trading at 96.79. Moving on to the euro-dollar pair, we can see yesterday's high, 2.5-year high, 1.1776 here. It did fall fairly sharply yesterday, dropping to as low as around 1.1650. It has rebounded somewhat, although seems to be struggling to regain the 1.17 level. The only thing to watch for the Eurozone is the economic sentiment index coming up later in the day. The pound, on the other hand, also fell sharply as well yesterday, dropping back below the 1.31 level. There was an announcement by the UK Chancellor Philip Hammond that he's appointed David Ramsden, he's an economist, to replace Charlotte Hogg, who was forced to resign earlier in the year. From what is known about Ramsden, he's likely to be a dovish member, and given that Christine Forbes, who ended her term at the MPC in the Bank of England's MPC, she's been replaced by also someone who's likely to be a dove, and this is important, more important now that we've got a Bank of England monetary policy next week, and that more recently some MPC members have been voicing concerns about rising inflation, and given that now in the latest lineup we have more doves than hawks, this could potentially hurt the pound, because one of the reasons why the pound has been rising in recent weeks is because on the expectations that the Bank of England could raise rates. If you see any reversal of those expectations, we could see a big drop in sterling. A quick look at oil prices. They're fairly steady this morning. Yesterday we saw US crude breaking above $49 a barrel and Brent crude above $51 to 8-week highs. We've got the oil rig count coming up of the US later in the day, and that should show whether US shale output is continuing to rise. Canadian dollar had reached another 2-year high yesterday of 1.2412 against the US dollar. It has dropped back a little bit this morning. We can see USD CAD recovering back above 1.25. It's going to be a fairly busy day for economic data. We had French preliminary quarterly growth for second quarter coming in at, as expected, at 0.5%. We also had the GfK Consumer Confidence Index for the UK that came in below expectations in July, and also did hurt the pound a little bit early today. We've got the Eurozone economic sentiments coming up later, as well as flash inflation numbers out of Germany, but the big focus will be the advanced GDP numbers out of the US for the second quarter, as well as the monthly GDP figures for Canada, and also we're going to have Minneapolis Fed President Neil Kashkari speaking at 17:20 GMT. That's it from me. Thank you very much for watching and have a great day.